Twitch and Periscope. Um, wow, it looks like okay. Well, guess I got to do that. I'm not going to be on Facebook today. Oh well, I guess I'm only on 3, but oh well, I can't complain. Still working out the technical details here. But I am live on TikTok, Facebook, no, not Facebook, YouTube, Periscope, and Twitch. Hey, everybody. It is Jim Malone here again, and the markets have closed. It was a tremendous up day. Wow. It's it's kind of interesting how these things work. I just want to show you the market direction. We're almost back up to the $10,000 line. It is incredible because, it went down 500 points. It's going back up. So it's up and down, up and down, up and down. Wow. S&P 500's up extremely nicely. Dow Jones, and also the NASDAQ. And so that is pretty awesome. We are definitely moving in the right direction. And so I just think that there's some real upside opportunities here. It looks as if, the caged animal is not going to be caged. So we are moving higher. And I definitely want to show you the spider. Again, I show that every time, and that's the S&P 500 stock. Now, what this is this is the world's largest ETF. It's about 220 billion, depending on the market valuation at any time. And it looks as if we have bounced off of the 200-day, off to the 40-day moving average. Now, just so that people that are watching on TikTok can see this, we have, this is available. These charts that I'm showing are available on online. So as you can see, this is the 40-day moving average. This is this red line here. The spider has come down, almost touched it, and then it's moved higher. So we may be moving upwards of 325. I think that would be just incredible if we did. It's just amazing. I can't get over how powerful some of this upward motion is. So it's definitely powerful, and it doesn't seem to be changing at all. It seems to be moving higher. So definitely not a good time to be short. So let's see if I can give you another. And I want to show you the Qs here too. This is a slide I've made of the Invesco QQQ Trust. This is the NASDAQ 100. This covers the NASDAQ 100, and it too is up tremendously, almost 2% today, up $4.63. So this is very much of a good indicator that with this new infrastructure bill that it looks like is going to happen, well, it looks like we may actually go higher. So, but again, I think it's still dicey to be in the airlines, though people have made money in it. I'm currently not in the airlines. I think some of the very debt-dependent stocks you want to be careful with, because I do think that there is issues there with that. So that said, I want to show you the bulls versus bears chart, and it's very interesting. The bulls are moving higher. 56.9% of all of the people that write about the stock market in the press are basically bullish right now. And bearish, there are some people out there who are bearish, but only about 20.6%. And I really think this has to do a lot with what Jay Powell has done to support some of the debt issues out there. He's basically said that it's an open checkbook. We're not going to let the economy stall. Now, I hope that we won't get in too much trouble with that later on, but at least for right now, it's good for the market, and it seems to be making some very nice. It seems to be supporting the market. So that's all I can say. I want to show you, okay, that's bulls versus bears. Now, I want to show you two stocks, and this is kind of very interesting. They are both very similar in terms of their names. So, this is definitely, that was StreamYard. Yeah, this is my trade of the day. And there's two stocks in there. One's called TTGT, and as you can see, it's very strong, 97 on the composite rating, and it's up today very strongly, 5%. But there's another stock that's basically in this particular area, and that is the one I'm going to show you next. And I'm going to show you, this is the trade of the day that I'm going to show you on. Now, you can do this either, I'll probably be in this tomorrow. I didn't make the cutoff today. I just kind of discovered it. But it's a company called this Trade Desk. It's got a 99 composite rating, and it's up very strongly today at 3.9%, 1.5% up. It's kind of an expensive stock at $374.50. But I have a 3-day trade on it that might be of interest to you. And this is how it works. Oops, there we go. Okay, hopefully you could see this on the screen. Basically what this entails doing is buying 100 shares of the stock and then selling an option to buy it back on Friday, at the close of Friday. I'm looking at an annualized percentage of about over 300% on this trade, because this particular option right now is paying $9.10, which translates it to $910. So this is a good way that you could make a quick $1,000 before the end of the week. This is a kind of hopefully a high safety trade that you can do. It's a very, very short trade. And basically the way it works is that you purchase the stock. And in this example that I took just right today, the stock is currently trading 374.02. Now it probably will change a little bit before tomorrow. Buy 100 shares of that and immediately then sell an option. In this case, I'm looking to sell the 375 option, which is basically just a few cents below where this one is. It's trading currently for $9.10, and that would give you this scenario here. It would be $9.10, and then if this option is exercised, it would give you a $98 profit plus the $9.10, giving you about $1,000 for basically 3 days of work. Well, not really work. I try not to work because it's not good for me. But this would give you a very nice increase here. This is a trade that I'm kind of recommending. It's because it's in the sweet spot right now. It's called the Trade Desk. Okay, what are your thoughts on public schools being forced to teach Senegalese language classes? I think it's ridiculous, but most of what the schools have been taken over by the Luddites and a lot of the people. And really, why not prepare people to compete in the real world? In the real world, the two most important, there's 3 languages in the world that are going to be, well, there's about 4 languages in the world that are spoken by the vast majority of people. English is number 1, Chinese, Mandarin, Spanish, and Arabic. So if you're looking to the 21st century, look at those languages. Senegalese, it's just stupid, but whatever. A lot of people want the country that they never had in their home country in our country, and it's just beyond silly. It's just beyond silly. It's just equipping a whole class of people for failure. So, what can I say? They're the makers and there's the takers, and a lot of people don't understand the makers, so they want to be the takers, and it's so sad because everyone has a right to be successful and profitable, and build wealth, and it's not really that hard. You look at what's working, and you go along with that. One of the things, I was fortunate. I was dyslexic as a kid, and fortunately, it was beat into me to learn how to speak and write English. Now, had that not been the case, probably I wouldn't be doing what I'm doing now. But I did that, and guess what? It opened up a whole world of opportunity. Now I was very fortunate. It's my native language. But there you go. So, anyways, not. I don't want to get on a rant because that's not productive. So let's see if I can get a question. Hey, man. Hi, Jim. Thanks for taking a look at me, Dave. And this is on YouTube. I actually have some people that watch me on YouTube, which is great. I really, really like that fact that I'm actually on YouTube and somebody's actually looking, which is actually great. Okay, so yeah, I'm good and great today. I'm sorry I'm late, man. I was talking with a guy a company actually next door to mine, and he's a Russian guy, very interesting character. He speaks like 5 languages. It's just unbelievable. He's fluent in Mandarin. As a matter of fact, he was a TV anchor in Taiwan, of all places. Just a fascinating guy, and totally. But he's here in Dallas. By the way, I maybe I'm very raw for Dallas, but people are coming here from everywhere in the world, and this place is doing very well. I'm not originally from Dallas. I came here from Silicon Valley, if you can believe that. But there's just a lot of opportunity here, and a lot of good things happening. So just FYI, if you're looking for a place to move to. What are your thoughts about public schools being okay? Kind of went over that. All right. Is it good to buy Trade Desk stock? Yeah, I think so. I'm looking at the chart and I'm like, wow, Trade Desk. This is the kind of thing that I really like. Thanks, Wendy. By the way, I love the fact that you're looking at me on Periscope. And anyways, I appreciate that very much. So yeah, I'm definitely late. Yeah, I think the Trade Desk really looks strong. I'm probably going to enter the trade. Now let me kind of show you that. Again, I kind of went through it really kind of quickly, but let me show you this chart. I like it. I think it's very strong. It's basically a 99 on the. There it is. It's 99 composite rating. The chart looks very good. It's a sort of a modified cup with handle, not true a cup with handle, but very strong. As you can see, there's a lot of buying pressure here. Now, there's only one thing about this chart that I don't like, and I want to see a little bit more conviction on this before I'm. But I definitely think that this is definitely a one that I really like. So I'm going to show you the trade. I just put this together before I came on the air here, and this, I don't know if you can see it. This is a little bit hard to see sometimes because these numbers are kind of small. But this will give you $1,000 basically in about 3 days. I know it's a lot of money, but here's the thing: for a lot of these trades, I use margin just because I'm borrowing at 7.5%, and then I'm making 300% for a few days. So that's a pretty good deal. That's the way I like to do it. So. The cost of the shares for 100 shares, the way this trade works is you buy 100 shares of the Trade Desk on tomorrow. Try to buy it not in the morning, because if you buy too early, a lot of times it'll be fluctuating. Wait until about 9:30 Eastern time. It's a good time. And then buy 100 shares and then sell an option. And the option I'm looking to sell here is the Trade Desk June 19th auction with the $375 strike price. Now, if on Friday at the close it exceeds that number, which I do believe it is because of the chart that I'm looking at, here's what will happen with that. You'll make approximately $910 on the option itself. It'll expire, but then if it goes above that 375, they'll exercise that option. You'll make a little bit of money on that between where you bought it and where you sold it, which is about $98, giving you about $1,000 profit on that. So the cost of the shares, basically, this will give you about a 2.4% plus the 5%, about a 2.7% upside on that. And that, because it's only 3 days, is going to give you about a return of 328%. So that's kind of nice. That I like to make trades like this because these kind of trades, you do enough of these, and it definitely helps your bank account. See, BYD and IQ. What do you think about these stocks? Okay, well, I'm going to switch over here, and let me see if I can do that real quick and show you these stocks. So let me get that going for you. Go over here and get the chart up there. And you're looking for, let's see, BYND. And let me see if I can get BYND. Let me see if I can get a chart there for you. All right, BYND, Beyond Meat. And it's number one in its category, so it's down a little bit today. But let me move back to that chart here. Okay, well, this is Beyond Meat. It's got a very nice handle forming here. I like this. It's down. That doesn't. that's an issue here. It's got a 90 composite rating, which I think is great. And it's definitely moving up. And as you can see, and let me see if I can show you this. It's number one in its group. And let's look at some of the statistics on it. Just want to look at it carefully. This is what I like to buy. By the way, I'm always looking to buy. There's 197 different sectors, industry group ranking. So this is in the top. I like to buy them in the top third. So this 68 number is a good number here. One, of course, being the best, and 197 being the worst. Here's the philosophy. You can buy the best stock in the worst sector, and it's not going to help you. It's better to buy a better stock in a better sector. So definitely Beyond Meat, it qualifies in that case. But I don't like its annual pre-tax margin. It's losing money. Very much of a story stock. The thing about Beyond Meat is that is right now I think it's a real goer. But I just foresee a lot of competition on the horizon. People like Hormel are just not going to let them eat their lunch. They've got some real big competition coming. So I'm not as bullish on that as some of the other ones. So let me see if I can give you a look at IQ. Let me look at IQ. Again, there's a lot of people that really like Beyond Meat. It's a big millennial stock. I don't necessarily like. Now this one is totally, this is after hours. Okay, so there's something happening with this stock. I can't quite figure it out, but let's look at the chart here. Okay, there's a spike, and there's a tremendous increase in volume. So this is a short squeeze. Okay, here's what I mean by this stock. This is really not an investment. It's a Chinese company. Okay, here's the problem with Chinese companies. Typically, their books are not kept with generally accepted accounting principles. They use a modified accounting principle, so they really cannot rely on their numbers. As a matter of fact, I did a little bit of a video on this, and you can see this with Luckin Coffee, and even with the very best ones, like Baba and those issues. It's much more difficult to rely. You have to rely totally on technicals with the Chinese companies. Now, this is why I'm a little bit afraid of a stock like this. This is a classic short squeeze. People were shorting this stock, and all of a sudden they had to cover. Boom, it pops up like this. This chart pattern does not happen from regular people saying, "Oh, this is a great stock, we're going to buy it." This is a short squeeze. So I would really I wouldn't be in either of these stocks. I'm sorry to be a Debbie Downer here, but I can't recommend either of these. I just don't think they're strong enough, and I don't think you're going to win on them. So, and that's what I'm about. Have you heard of Signos? Okay, well, whatever. There's people in Minneapolis that want Mogadishu, but they want Mogadishu with running water and electricity. So over whatever, whatever. Okay, so now Disney. Now Disney's a different story because Disney has some really, here's the thing. I'm of two minds of Disney, DIS. On the one hand, I love the stock because I think that they have just some great brand equity. But on the other hand, they have cruise ships and they have a lot of things like that I don't think are going to do very well in this environment. So let me show you the chart here really quickly. By the way, for everyone, I am simulcasting on Periscope and on YouTube, and sometimes on Facebook when it works. And it hasn't been working for me, so close that. Okay, yeah, it's bouncing off the 40-day moving average. It does like it's moving higher, but this is a range-bound stock. This is possible. There's possibly 10. It's possibly 118 up to about 128, as you can see on there. So this is a range-bound stock. This is an okay chart pattern, but there's so many better stocks than this. There's so many better stocks than this that out there. It's not that I dislike Disney, but if you look at this, it's a composite rating of 38, which I don't really like to buy them. Why buy a 38 when I can buy a 95 or better? Why not do that? It's just like, yes, there. And let's look at the number, the what's number one in the group, in the Disney group, and that is, let's see. Oh, Liberty Mobile. Okay, yeah, Liberty Media is a better company. This is the one you should buy instead of Disney. Okay, it just is. It's cheaper, $36. It's got a better chart pattern, and it's higher ranked. So that's just me. Why buy quality? Why not buy the most quality that you can for the lowest price? Now, does that mean to buy a cheap stock? No, don't buy a cheap stock, because cheap stocks, you get in trouble with cheap stocks. You really do. You get in trouble with cheap stocks. You should try to buy a stock that is good and getting better. I mean, that's just kind of common sense. The problem with that, of course, is weirdness on my there we go. The problem with that, of course, is that what do you buy? Well, I try to buy stocks that are good and getting better, and that's the reason why even though Disney is a great company, I just don't think it's the time for Disney right now. It's not necessarily where you want to be. So I'm probably beat that horse a little bit. So let's see if I have another question. Is it a good time to buy? Yeah, I think it is a good time to buy the trade desk. By the way, TTD is the symbol. It might be a little bit weak in the morning, so see how it trades with the trade desk. See how it trades in the morning. See if it's trading. If it's trading down, wait until it moves to an uptick. This is just FYI, and you'll do so many of these trades, it'll start to be real easy. But you always want to buy a stock when it's on an uptick. So if you get up in the morning and you're looking to say, wow, TTD is down in early, don't buy it when it's moving down. Wait until you see some strength, and don't try to buy it at the very bottom. Wait until you see some strength. Try to buy it on an uptick. You'll be happy you did, because you can get 1 or 2 points that way very, very easily. All right, we have a question. Oh, hey David, thanks for the question. Shopify. Let me see if I can get something for Shopify. I think Shopify is SHOP. I think that's the symbol. Let's see. Yep, Shopify. Ooh, man, talk about a strong stock. Shopify is extremely strong, and let me show you that on the screen here, so we can pick this one apart. Man, if you have the money to buy this stock, I don't think there's a better one. Look at this. Look at this beautiful pattern. This is a beautiful pattern. Look at it. Look at its composite rating, 98. It's up to date. It's up to date 29 cents. Not a lot. But what you want to look on this one is how the options are trading. So after hours, it's up. Yeah, this is going to move. This is going to move tomorrow. If you have the money, and this would be a pretty expensive trade, but it might be a very worthwhile trade. Let me take a look at the options chain to see kind of where it's at. I'm going to look at the 805 and the 810 option that expire on Friday. The reason I look at the options, by the way, everyone, is because with the options, typically you can get a good idea of what the short-term sentiment is on a particular stock. So I'm just going to work on getting you an idea of what we're talking about in terms of the options. So the symbol is SHOP, and that's Shopify. It's a Canadian company. It's just absolutely excellent. Many people are powering their stores, their online stores, with this stock, and it's been very, very strong. So let me look at the options here. Yeah, there's a $15 option on it. I don't know if you can see this online, but let me see if I can put this up on the screen to show you why this stock is going to pop tomorrow. And let me pull it back and show you that on the screen. So I don't know if you can see this, but do you see where it says 15 right here? This is June 19th. Okay, this expires in basically in 3 days. Where this is the 810 option. Okay, this is the 810 option. Yeah, this is going to produce about this is potential. You can invest. This is how you can invest. This is how, by the way, folks, this is how you can invest your money and get over a 200% return for 3 or 4 days. And this is what's going to happen with Shopify. So I really appreciate that. Shopify is a solid gold idea here. So that's a great idea. And thank you, David, for sharing it. Normally I would do the math on this, but on the fly, but this is an excellent stock. If you're thinking about doing this, try to go in. I don't know if you can. You may only be able to do this for 3 or 4 days, but I would go in, buy 100 shares, and then I would sell that option, and you're going to see some nice returns on that. AIRG and GLUU, thinking long on them. Okay, let's look to see if this is a worth long. Let me just go ahead and get some more information on that. Unfortunately, I don't know these particular issues off the top of my head, but I'm going to look at AIRG really quick here. Yeah, Airgain. Okay, this is interesting. Very interesting. 44. This is okay. Okay, let me pull this up on the screen so that you can see it, basically. And yeah, there we go. And so let's look at this chart. Okay, it's moving off the 41. Okay, this is not a bad pattern. This is not a great pattern, because what I'd like to see here is I don't know if I would buy it right away there, but I think you're going to get a more of a cupping action here. I think we're a little bit too early in this issue. You can see there's been a fair amount of selling, and then there's an up day here. So there seems to be some resistance at about 11, and I don't know quite why that is. It doesn't look like it is a okay, so it's embedded and has used. Yeah, okay, okay. So this is a 5G kind of play. Not a bad idea. Interesting. I want to see what the number 1 rank is in this particular area, and this is in my I'm telling you that this one IIVI is the number 1. Yeah, 49. Okay, I don't know this area that well. Yeah, okay. Modular laser processing against fiber optic cables. This is a good chart. This is a really good chart, actually. Composite rating of 92. This one you might want to consider instead. Basically moved nothing. $49. Relatively thinly traded issue. Now, here's the thing. I typically like to buy issues that are trading more than 1 million shares a day, and this one isn't quite there, but it's getting there. 843. The volume is down, so this definitely trades more than $1 million a day, so 1 million shares a day. So this is definitely worth looking at. It's got a very strong relative strength at 94 as well. That's where I would be. Let's see if I can get one for a GLUU question on that one. So let's see if I can put that one up. There we go. Learn how to do all this stuff, Mr. Technical here. GLUU. Okay. Oh, this is a mobile. Is this a Chinese mobile? Okay. Third-party mobile games. I do like the space, but I don't like the chart. So let me show you the chart and see, what you think. Okay. Let me look at the chart. Okay. Yeah. I don't like this chart, and mainly because the trend is wrong on this. It's moving down, even though it's $8.73. It looks like it may bounce off of this 40-day moving average, but I would wait until it was confirmed up. It seems very choppy. This is the 40-day moving average, and you can see there's blue lines, which is buying and then but they're almost interspersed directly with the red ones. So I am not a fan of this one, unfortunately. Oh wow, I've got a great question here. This person is asking about one of my absolute favorite companies, and that's Lam Research. This is really, really, really good. Let me see if I can give you a chart on Lam. Is it IR CX? For people out there that don't know, actually, I have a disclosure to make. When I was in Silicon Valley, Lam Research was one of my clients. This was years ago, but the company is a leader in what they call CMP, chemical mechanical planarization. And what does that mean? Well, when they make ICs, integrated circuits, what they do is they lay down a number of layers, and then they grind off the layers, and that's what creates that's what creates typically the circuit. So Lam Research is LRCX. I'm sorry, that's LRCX is the symbol. So let me see if I can get a chart on LRCX for you. Hold on, LRCX. All right. Yep, there we go. Yeah, very strong. Yeah, let me just show you basically what I've got here with Lam Research. So let me get back there. There we go. Okay, here's Lam Research. And, it's moving well above. Yeah, it's a gapped up today. This is a buy. Look at that, $14.34, up almost 4%. Yeah, 98. This is a winner. Put this one down in your watch list. LRCX. I don't know if you can buy it, but this is definitely worth. I want to look at the 310 option expiring in 2 days to see kind of, what kind of motion we're looking at here. Let me see if I can bring that up for you really quickly. So hopefully, if I get this right, there we go. That's LRCX. LRCX. And Lam Research. And I'm going to look at the option. Here's, folks, the reason I'm looking at these options is because this is this shows how people are moving into it. Okay, well, interesting. This option tells me that it is not okay. This tells me that it has seen most of its upward movement today, and it's probably going to back off a little bit tomorrow. And let me show you why I know that. Okay, so let me go back here and show you the actual options chart. As you can see, the June 19th strike this is the 307.50 strike, and this is just about $2 below where it's trading currently, where it ended the day is trading $5, basically $5. Let's see, yeah, $5.20. This should be higher here if the sentiment was higher on the stock. So I would wait 2 or 3 days on this one, see how it trades, and then go back there. Hey, it looks like I have some people coming in on. Sir, can you search up Abigail Shapiro? I'm sorry, it's stock show. Can't do that. Let's see what else is. I am the real life Peter Griffin, by the way. Yeah, I definitely am. So I need to go on a diet. I am Jim Malone. I am not the best looking guy in the world. So I'd appreciate it if you, okay, I'm sure you would. Somebody's into controls the stock market. Yeah, right. Oh, but I'm excited that you're watching on Twitch. I really am. I really am. I am excited that you're looking at me on Twitch. I just started broadcasting on Twitch. Very excited about it, and thanks for looking. I really, if I get one viewer, I consider that a victory because I have a face for radio, so. But I do really enjoy this. So, anyways, let's see if I have another question from TikTok, because I broadcast, by the way, on TikTok a lot. And okay, hey, what was the call on Shopify? You know what? On a put on Shopify, I don't think you should be going with a put on Shopify. My personal opinion here, but I think Shopify is going higher based on my analysis of the short option. I think it's going higher tomorrow. I mean, I know it's hard to believe, but I do think it is. So I don't think I would be a seller of a put. Now, for everybody out there that doesn't know, a cash secured put, when you sell a put and you secure it with cash, that is a bearish call on a stock. So I definitely, looking at their chart, looking at Shopify's chart and the option, I am not bearish on it, at least in the short term. I am bullish on it. And being bullish on it, I would want to sell a call, not buy a put. Just my opinion. on that. I think it's going higher, and I think you can do well there. Also, let me see if I can get some earnings information. Let me see if I can get some earnings on Shopify. Shopify, by the way, for any, I'm sure that most everyone knows this out there. Shopify basically powers just a tremendous number of sites. It is a very revolutionary company, I think, and it just continues to go higher. It's a Canadian firm, as you probably well know. It's not #1 ranked, believe it or not. I think it should be. It's got a very, very nice cup in terms of its chart. I'm going to show you the chart here once again. I showed it earlier in the show, and I think it's worth looking at because it's such a good chart. Up like this, and it's moving up. When it basically breaks this line, when it breaks about the reason that the option is selling for what it's selling for, first of all, it's a high price stock, but second of all, it's because it's just about ready to pop. It's better to move to a different level as well. So that's part of my strategy to make quick money, is to always look for stocks that are getting ready to move into a new trading range, and this is definitely the case with Shopify. So hopefully I can show you that in this chart. I don't know if you can see it. You see how it popped up here at it's about 8:15. It's moving up very strongly here. I believe, we're potentially looking at it going even higher. Let's see if I can increase the size of this chart. There we go. Okay, here we go. So this is going to really break out. This is a cup with handle. This is the best chart pattern. It's on leaderboard, which makes it even stronger. I think it's going into the 900 range based on this chart. The volume, I'd like to see a little bit more volume here, but basically this is all buying volume. This thing is probably going higher, and so it's just it's just a big deal. Okay, well, let's see. Somebody wants to say buy guns. Yeah, I probably will. Yeah, there you go. Okay. People should be buying stocks and guns. Well, somebody said that. He said, well, I think a lot of this thing. I know that it sounds like Rome is burning, and Nero's out there playing his fiddle, but I don't think so. I just think that we have a lot of entrenched politicians that are going to get spanked in this election, and I think a lot of people are just going to that have been in there for 30 years are going to lose their jobs, so they don't want it, and they're willing to do anything to make that happen. So I don't think it's going to happen. Not with the stock market like this. The stock market is the leading indicator, folks. 6 months to 18 months. It is a fortune teller, and right now, at least from what I'm seeing, the stimulus seems to be working, and with this new infrastructure bill, it's probably going to be better than it is currently. I have a question about Marriott here. I can't really get behind Marriott. Marriott was one of my shorts, and the reason I don't like Marriott is because of its debt load. I think that it does carry much too heavy of a debt load. I want to show you the chart on Marriott. So, and I want to show you several things. And the reason I think that you might be able to make some money on a bounce back. Now, as a trading stock, you might be able to. It's up very, very strongly today. But I think for a long-term hold, I think you got to be extremely careful on Marriott. I don't think it's going to collapse, but again, it is but as a contrarian call, probably you might be able to make money. I just don't like it as much. I don't like the chart. I don't like the chart when the chart is trending down. I'm not typically a buyer because there's so many opportunities to buy in an up chart. I like to buy in an uptick, not on a downtick. It's just me. This has served me well over the years. So first of all, I don't like this chart action. Maybe if it moves to the upside and I could see some confirmation, see this thing trading above, the 120 level, then I might be interested in it. But right now, I'm not. It's trending down. This is not a kind of a chart that you want to buy. You can make money on these. I'm not saying you can't, but let's look at this. It's being, it has a fairly good accumulation rating, which is good. But this is the number on Marriott that I really, really am afraid of. And this is the debt level. It's 1,417% of its valuation, which is $30 billion in debt. So take this number and multiply it by 14, and that gives you an idea of what the debt on this bad boy is. The debt on this thing is high, and we're in a relatively, we're not in an inflationary market. The government wants it to be an inflationary market because they tend to be a lot kinder to the economy than deflationary markets. But we are in a deflationary, we're in a relatively deflationary market, and so that's the kind of thing that you got to really watch out for. This debt level. This debt level is just too high, and I don't think that it'd be wise to be in Marriott. Though as a trading stock, you probably can make some money on it. So let's see. Yeah, should we buy Walmart and Target? Well, yeah, if you want to be like everyone else, I suppose. I mean, Walmart doesn't excite me. WMT, it's a great stock. I shop there. I'm not one that'll admit, oh, I don't shop at Walmart. I shop at Walmart. Everyone shops at Walmart, but I just don't. WMT is not really where I want to be. Now it's up today. But let me show you this chart and show you why this chart is not a good chart to buy. So I'm going to push back over here to the chart. I'm going to show you this. It's trending downwards. Do you see that? Down. This is not a chart you want to buy. This chart tells me that, once this coronavirus thing is over with, it's probably gonna head lower. I mean, it's probably gonna head more. Walmart is a terrific company, and I think they have a great. I think they have a great online presence, and they're growing. But you know what? This is the stock you want. You want Amazon. You want Amazon. And if you can't buy Amazon, buy the Qs. Buy the QQQ. It contains Amazon. Walmart is a great stock. It's going to survive. It's not going away. But there's so many other places. Here's the thing about the stock market. There's always a place in the market that's going to move and it's going to make you money, either going up or going down. It's really, that's what I'm trying to do, is find these areas of opportunity. And, and anyone can do this, but that's what I'm trying to do. Okay, Caterpillar. You know what? I do like Caterpillar for the infrastructure play, but I don't know if I would be in it because Caterpillar next to Boeing, I think I know it's in the top 10 in terms of being an exporter. So, oh yeah, it's up strong today. And of course, Caterpillar is up strong today because of what the president said regarding infrastructure. Infrastructure, anytime there's infrastructure, stocks like Caterpillar and Deere love this because they know that there's going to be buying in this. This is a good stock. It's not a great stock. I wouldn't be in it until it at least had cleared this 140 level. It's too low. If this thing shows strength, this thing is potentially a buy, but only 140 and above. It's got a fairly good composite rating, but there's just other places that you can put your money that you're gonna make more. And I think one of them, and I want to show you this stock because I do think that, by the way, as I kind of thought yesterday, Apple is announcing that they're going to roll out the 5G phone, the iPhone, and that's going to be in the September 21st, 22nd timeframe, same time all of the time. But this stock, QRVO, is likely to benefit tremendously from this. This is the company that makes some of the RF chips. Yeah, and they're up strong. So let me just show you the stock that you want. This is about the new world as opposed to the old world. Not the Caterpillar is great. It's a great company. But this is the company you want. Here, Qorvo. Look at it. It's moving up. See this chart pattern? It's going from low to high. So you want to buy an uptick. It's strongly up, $2.86 today. That's 2%. It's also in a much better situation with a composite rating of 95. These are the kind of stocks you want to buy. These are the kind. I'm not berating you for Caterpillar. Caterpillar is a name; it's known. But companies like Qorvo, which make the RF chipset for the iPhone, these are going to be the winners, and we're coming on the winners now. So that's when you want to watch this. QRVO is the symbol. So let's see if I got any more people on TikTok. Hey, was that a call or it's a call? By the way, this is a question from this is a question on Shopify. It's a call. Now, if you're going to buy the call, here's the thing. I don't typically like to buy calls. I typically like to be a seller, but that's expensive because typically what you have to do on that is buy 100 shares of the stock and then you sell one contract. So that doesn't necessarily work for everyone. But I do think based on what I'm seeing in the action, and here's the thing, if I'm buying the call, I want to be further out. I don't want to buy a call that's going to expire in 2 days. I just don't want to do it. Now, selling a call, I want to do that because I'm going to typically win on that 70% of the time. But if I'm buying a call on a Shopify, I want to be out further than that. So let's take a look. I'm just going to look on Shopify to see kind of where I would be buying calls on Shopify. SHOP is the symbol. And let me see if I can get that. SHOP. And it's a lot more risky to purchase to purchase calls than sell them, but it also doesn't require as much money either. So there you go. So let's see if I can give you a good idea of that, of what. Now I would be looking on a Shopify call. I would be looking to go out to at least August. And let me see if there's a good August. Let me see if I can give you a good range to kind of a good place to start looking for the Shopify calls. So let's see. Oh, come on. Come on. It's not. Apparently my connection again is not. I'm waiting. Okay, so let's see if I can get the August Shopify calls. That's probably where you want to be looking if you're going to purchase a call for Shopify. Wow, these are expensive calls. You know what? I would be. I don't know. This is kind of pricey, but the August 21st 880 call, it's not bad. It's $62, so that's kind of expensive. I'm going to do a little bit more research on that Shopify. But what I was recommending on Shopify, and this is sort of, I like to take very low risk bets, and basically what I was talking about is buying 100 shares of Shopify, selling the call to expire on Friday, and then obviously cashing out. So that would make about $1,000 on that one. Okay, so that's kind of, but definitely Shopify is definitely worth your time looking there. Team, another fabulous stock. By the way, Atlassian is the symbol for Team. Team is an Australian company that makes just a tremendous product that allows collaboration on the development of software. TEAM is the name. It's good. It's moved down a little bit. I would wait for an uptick on this one, but it's still got extremely strong. It's extremely strong. Let me see it. Let me put this up on the screen here for you so you can see it. He said, I don't like buying in a pattern like this. It's going from high to low. Don't like that. But if this thing starts moving up and moving past 190, I think this is the screaming buy. Look at this positive composite rating. Here's the thing with these really, really strong stocks like this, I typically like to buy them on their highs because that reduces the risk for you there a little bit. So this is a watch list. I wouldn't be in this stock at the moment just because I'm looking at the chart pattern and I don't think it's optimal. You see, it's topped here. And that's part of the issue. I would wait until it trades back up. If it hits the 190 range, or basically, the 185 range right in here, if it moves back up to this location, that's where you want to buy it because that will almost certainly go higher if it's in that trading range. So right now it's in, right now it's a little bit, it's not ready to be there. It's 172 right now. So it's a little bit low. I'd wait for this to go higher, but it's definitely a quality stock, and it just is, and it's going to be a winner in the new world that we're coming into, where everything is being digitized. So, great stock. Hey Jim, thoughts on Macy's? Gosh, wow. Um, I feel for you. You know what? I had just for disclosure, I had a J.C. Penney's bond, and it was that I sold last summer. I'm so glad I did, because I just don't like this retail space. I like Macy's. I think it's a great company, but let me just show you this chart and just show you why you don't want to own this one right now. I know you can't always buy winners, and sometimes buying stuff as they're coming up, great companies, is really worthwhile doing. Macy's has great management. Macy's has, in terms of if the department store space, they're definitely a winner. But I don't know. It's really hard to get behind something that has a composite rating of 1. But if I were to buy this one, see the problem, the biggest problem that Macy's has is can the reopening economy recover fast enough to get their revenues up, or can they cut their overhead fast enough? That's the issue. I think that the problem is their business model isn't working obviously as well as it used to. But the question is, is there room for mall-based department stores in the market? I can't say that I know that. I think in some of the more affluent areas there is, but unfortunately, this chart I don't like this chart, but it is bouncing, so that's a good thing. It's come way down here, and then it's moved above the 40-day moving average, and it's moving up strong. If I were to buy this one, I would only have a half position on that. And what do I mean by a half position? Well, I think this is buyable, by the way. I do think M is buyable. I'd start with a half position on this one. What do I mean by half position? Well, if let's say you had $100,000 to invest. Well, if you have $100,000, you divide that by 8, and that gives you about $12,500. That's essentially one position. You don't want to trade any more than about 8 positions. So on this one, I would possibly, if I had a $100,000 portfolio and I was willing to risk a little bit, I would go in with about no more than about $6,000 on that. And so where this is trading now, where M is trading now, let's see if I can give you an idea with the trading. Obviously, this is Shopify. See, Shopify is the future for retail, and M, unfortunately, is the past. You can make money in the past. You can make money, but it's harder to do. It's trading for $7. Okay, the maximum one position that I would take in this, if I had a $100,000 portfolio, would be a half position, which is about $6,000. So I would only take, I would only buy 1,000 shares of this maximum, but I would start with maybe 200. So that might be a good thing. That'll only be at the price that it's at now. That's only $1,400. That's not a bad idea. I think I would buy this one. I think I would buy Macy's. Matter of fact, I'm going to put that on the list. I think that, it's a little bit higher, but, that's a buyable chart, actually. That's a buyable chart. And again, I do like the fact that they are, I know how strong their management is. It's a strong company. But, again, it's hard to buy them. Buying bargains is not my specialty. I am not a value investor. I'll be totally honest with you on that. I'm, Warren Buffett is, he'll go in with $1 billion and buy a position, but I'm certainly not in that category. But because of this weird market, I think you can benefit. So, and it's definitely one. Okay, I got a question on ConocoPhillips. Man, I don't like the sector. I don't like the oil sector, but I do like ConocoPhillips. I do think they're a strong company. I do think they're well run, and I do think they're not going to go out of business. It's going to be tough for them, but they're not going to go out of business. I do like the chart. It is upward trending. That's very good for the oil business. It hasn't moved down. It's testing the 40-day moving average. It's up strongly today, 4%. The only problem is it has a bad composite rating, and that's mainly because of the sector it's in, not because of the company itself. I do know a little bit about this company. I'm not an expert in it by any stretch, but ConocoPhillips is a strong management. So let's look at their debt load. This is the thing I'm really concerned about in most of the oils is their debt load. Their debt load isn't bad. It's 42% here. That's not necessarily bad. I just don't want to see 100%, 200% debt loads. They just scare the bejesus out of me. But COP in the oil, if I want to play in the oil patch, that is a place I'd play. Here's the thing about investing in the oils right now. I just think that you can definitely make a money. It's a specialty, investing in the oils, and definitely, definitely the oils are good. But this is a little bit tough on this one. Oh, by the way, this is for Arnold here. Thanks for tuning in again, Arnold. I love it. The fact that you tune in to me every day. That's I really that makes me feel really good. Composite rating on on COP. This is ConocoPhillips. It's a 25, and the main reason there is a low composite rating on this one, it's mainly because of the sector that it's in. So let me kind of show you that. See if I can get that up on the screen here for you. Yeah. Okay. See the industry group rank here? You see that? It's 148. There's 197 groups, and unfortunately, this is in the bottom part of that. I typically like to buy groups that are higher than this, only because, only because I think you have a better chance. And also, hey, Macy's, yeah, I think if you're gonna buy something that's really beaten down that has a chance of going up, I think Macy's might be the place for you. You just have to be really careful because they can reverse and go into bankruptcy. But Macy's, retail is not a good sector to be in typically, but $7 a share, that's not bad for a company like Macy's. If it survives, it will definitely go higher. The question is, will it survive, and what's the debt load on it? And it's not horrible on Macy's. Let me just take a quick look back with Macy's, just to find out what their debt load is. This is a major thing for a retailer. Now, here's the thing about a retailer. Retailers are kind of special in that they carry a lot of they finance their accounts receivable typically, and that can be an issue. But their debt load isn't bad at 57%. I think Macy's might be worth going into. I wouldn't go in with anything more than about a half position though. If you again $100,000 portfolio, you basically don't want to go in with any more than about 200 to 300 shares on that. I don't think it's prudent to do that. But that's my take on it. So let's see if I've got some more questions on TikTok. Love TikTok questions. When you see Boeing stock in August, wow, this is really tough. Boeing was up strong today. I mean, it really was. Boeing is one of those companies that, I wish they had better management of Boeing. I really do, because I think they miss a lot of opportunities. I mean, SpaceX is eating their lunch in a business that they should be just cleaning everybody's clock. SpaceX and Boeing. Boeing got $4 billion to put a man up into the International Space Station. SpaceX got less than about $2.5 billion. Guess who went there first? That's telling. It's a tragedy. I don't think Boeing is up strongly today, 6%, 3% up on it. I think there are a lot of people. It's one of the biggest components of the Dow. This is definitely going to do well on the reopening. I can't totally be down in the stock. I was basically in this stock up until I bought it after it was slammed on March. I bought it at 95, and I sold it when it was 140 in the 140 range. But that was that was a kind of it's happening now kind of thing. It was just one of those things when we got slammed. I was also shorting the spider as well, but that was a little bit different. as it gets more pricey, it gets a little bit harder to do this. You see, here's the thing. It looks as if it's trying to find a level. It looks like it may trade in a range, and I'm hoping this is true. It's finally started to have a chart pattern. The problem, you don't want, when it's going down like this, you typically don't want to buy it. When I bought it as it was here, and then I sold it basically here at 145 right here. And then, of course, it went up and then it went down. This is the problem if it's showing strength, is it's going to retest. So it looks like it's already retested. It may be going fire. I mean, literally before the meltdown, this thing was a $310 stock. So I don't know. I think there's better ways to make money. I think there's just better ways to make money in the market. So let's see. What's your take on KR earnings report, BioPass? I don't know about that. Let me take a look at KR. Good question. Always from you, Arnold. KR. See if I can give you a good chart on that one. This is the KR chart. See if I can go back and give you a better chart here. KR. Yeah, Kroger. I wish Kroger's solid, absolutely solid. Matter of fact, I shopped there last. I shopped there last night. It's a great company, very well run. You're not going to make a whole lot of money on it. It's just hugging. You see, it's how it's hugging this 40-day moving average. It's just going to move up and down, and it's not going to do much. Great place to shop. Not an investment. Just at least not in my. There's so many other places you can make more money than Kroger. Kroger's not going to own that business. It's a great company, not an investment. Okay, I have basically been on here for an hour yammering, and I was late today because I got talking, as I always do. And I so appreciate everyone coming by here. I'm going to try to. I'm looking for suggestions out there. By the way, anybody out there that wants to possibly come on as a guest on the show, I haven't yet figured out how to technically do that, but I'm going to try to get some traders and ask them, once a week, maybe on Friday. I haven't made this happen yet. I'm just talking about it right now to get some other opinions on sort of their trade of the day and kind of what they're doing, how they're making money. So if you have any suggestions on it, if you want to be on, just get on my alerts list and let me just get on the alerts list, please, or send me a comment or a message, and that way I can I can respond easily. And basically the free alerts, and by the way, for everybody that's on TikTok, this is on Periscope at pscp.tv/Dallas Trading Floor. And basically our stock alerts mailing list is www.dallastradingfloor.com. And it's not every day. Sometimes I go a few days before I give an alert, but I try to put out alerts, every few days on the trades that I'm making, kind of, opportunities for quick profits, and also trades that I think that you might be interested in. And also, if you want to comment, same thing, Dallas Trading Floor, just drop me a comment, and then I'll get right back to you, hopefully with a trading idea or something like that. And so everyone, great seeing you. Thanks for tuning in, and happy trading. And I'll see you tomorrow, hopefully at the right time at 2:30 Central Time. Thank you. And for everybody on YouTube, Periscope, and now Twitch, thanks for tuning in, and especially the people out there that are looking at me on Twitch. I see it seems to be working, so thank you for looking at me on Twitch. Really appreciate it. I'll be back 2:30 tomorrow. Hopefully, I will get this thing going at the right time. Again, if you want to get on the mailing list for stock alerts and hopefully make you some money, this is all free, by the way. DallasTradingFloor.com, and just sign up for the alerts, and we'll get them right out to you. Again, I hope to see you tomorrow, and happy trading, and stay safe, everyone, and see you tomorrow.